Hello everyone and welcome back to these sessions on economics for finance. And friends, in this class we are going to begin with chapter 4 as per ICAI study material. Chapter 4 is titled as International Trade. This chapter again is divided into various units, and the first unit which we are talking about, it is all about theories of international trade. But before I take you to the theories of international trade, let us first have focus on what exactly international trade is. So we'll understand the meaning of international trade, why international trade is beneficial, that is arguments in favor of international trade, and why international trade is not beneficial, the arguments against the international trade. Let us have a look into this first. So let us first try to understand what exactly international trade is. So referring to this introductory paragraph, international trade is the exchange of goods and services as well as resources between countries. It involves transaction between residents of different countries as distinguished from domestic trade or internal trade, which involves exchange of goods and services within the domestic territory of a country using domestic currency. International trade involves transactions in multiple currencies. Compared to internal trade, international trade has greater complexity as it involves heterogeneity of customers and currencies, differences in legal systems, business practices, and political systems, more elaborate documentation, exchange rate risk, complex procedures and formalities, high operating cost, issues related to shipping, insurance and transportation, and diverse restrictions and interventions from governments in the form of taxes, regulations, duties, tariffs, quotas, trade barriers, standards, and restraints to movement of specified goods and services. At present, liberal international trade is an integral part of international relations and has become an important engine in growth in developed as well as developing countries. While some economists and policymakers argue that there are net benefits from keeping markets open to international trade and investments, others feel that trade generates a number of adverse consequences on the welfare of citizens. As students of economics, we need to have an objective understanding of claims put forth by both sections. We shall first examine the arguments in support of international trade. So let us read the first point over here. That is, international trade is a powerful stimulus to economic efficiency and contributes to economic growth and rising income. So one may keep wondering, how can international trade be a powerful stimulus? Now see what happens. Imagine that if there was no international trade, so manufacturers and traders in India, whatever they manufacture, we would have consumed. Are you observing this electronic pen in my hand? Are you observing these electronic pads on which I mark and write? These are not made in India. India is a developing country. India is my nation. I am proud of being an Indian, but facts will remain facts. Indian technology hasn't reached the level that we have manufacture of these kind of products in India. Imagine if there was no international trade, then the only choice I had to do, or I had to follow up, was to come at your place and take classes. What is this whole arrangement? It is supported by this advanced technology, and because of international trade, foreign manufactured goods are allowed to be traded in our country, and that is why it is increasing economic efficiency. It is enhancing income of people. Secondly, it is giving powerful stimulus to economic growth. Why? Because Indian manufacturers will now get an idea that yes, there is a scope in the business. We can progress by making such kind of goods even in our country, and therefore there will be too much of technology development, there will be too much of scientific oriented new discoveries, new inventions, there will be lots of cost reduction techniques. Why cost reduction techniques? Now I will give you one best example. Whenever there is a festive season, you see that lots of lights are imported from China. Why Chinese lights are imported in India? Now China is not supposed to be a very friendly country with us. In spite of that, we are having huge imports of electronic products from China, and basically because these products are known to be cheaper products. In India, the cost of manufacturing a light, I'm giving you the facts, the cost of manufacturing a light is higher than the net selling price of the same kind of product made in China. So what happens? Chinese products are most cost effective when it comes to electronic goods. Definitely China has always been using inferior quality materials, we know that, but still it is a challenge to Indian manufacturers. So what is happening? More and more of these goods, when they are made available in the country, Indian manufacturers will get awareness and they will try to compete. And when you try to compete someone or some nation, you will try to make better products, you will try to make better goods, you will try to offer better services. And all this is happening only and only because international trade is given a green signal. That means this is one of the most powerful argument in favor of international trade. Alright, let us focus on the second point. Trade provides access to new markets and new materials and enables sourcing of inputs and components internationally at competitive prices. Now guys, I'll give you one straight way of dealing with this particular point. You know, we are now right now into the era where COVID-19 vaccines are manufactured and spread across the world. So now there is abundant supply of COVID-19 vaccines. Do you know India was the first nation to have a proper vaccine? There are a little more than 200 countries across the world. 168 countries out of these were vaccinated with Indian manufactured vaccines. Why? Because first, not that Indian research and developers, they have made this kind of vaccine, not just that. Just imagine that vaccines were made but they were not permitted to be exported. What would have happened? 168 countries, citizens of 168 countries would not have been vaccinated at the early stage. Can you imagine that what could be a high level advantage of international trade? So, not just that, we have many other advantages related to that. If you could look into the last line in that paragraph, it is talking about foreign exchange reserves. I have told you earlier that what are foreign exchange reserves. If you can recall, in monetary policy chapter, we have talked about foreign exchange reserves. What are foreign exchange reserves and what are balance of payments? We have talked about that. Link that point with this. So when you are having more and more of exports, you will have the amount receivable in foreign currency. That will enhance the foreign currency reserves. If you have more and more of imports, it will reduce the foreign currency reserves, and therefore the net amount of export or import could be a positive or a negative amount. We would always want to have a competitive advantage over other countries, and that can be done when you are having a clear advantage of more exports and less imports. But yes, that is all subjective. Let us look into the next point. Let us focus on the next point. International trade enhances the extent of market and augments the scope for mechanization and specialization. So, why do we emphasize so much on international trade? Now, what happens? We will be happy if more and more goods which are used across the world are made in India. You would be so proud of being an Indian when you find that Indian manufactured goods are used. I just gave you example of the vaccines supplied by India. Isn't that a proud moment for you that you are citizen of a nation that has made supplies of these vaccines? Anyway, but that we have covered in the previous point. So here, what you are going to write in this point, that it is giving you enhanced. See, what is our benefit? Here earlier paragraph we have talked about benefit that we have offered to the world, but what is our benefit? We got extended market. Market today is not restricted to the domestic territory of our nation. Market has expanded. When today we talk about business, it is global business. We talk about the market, it is global market. We talk about customers and suppliers, these are global customers and global suppliers. Today you want to buy anything which is even manufactured at other end of the earth, you just have to search for it and you will find one or the other portal that will provide you that kind of product. And when you have to just book that product, make the payment, the product will be delivered at your doorstep. That kind of trade facilities have been opened up only because international trade is giving the origin point to all these trade facilities. Let us move to the next point, which says export stimulates economic growth by creating jobs, which could potentially reduce poverty and augmenting factor income, and so doing rising standards of livelihood and overall demand for goods and services. So I don't have to explain anything over here, it is self-explanatory point. So let us go ahead and talk about the fifth point over here. What is written over here? Let us see. Employment generating investments including foreign direct investments. So let me explain you this particular point over here. What is the meaning of foreign direct investment? And for that reason you also need to know what is the meaning of direct investment. So when there is a project in India and you are making your money invested in a project in India, you being an Indian investor using or investing your money in Indian projects, that is direct investment within the country. When a project in India is being funded by a foreign investor, or when a project in foreign country is funded by an Indian investor, that is what we call as foreign direct investment. So foreign direct investment is such a beneficial thing. Do you know interest rates in India? I have told you earlier that you can ask your parents that when they were of your age, interest rates in India were considerably very high. One big reason why in India interest rates have declined is foreign direct investment. And why foreign direct investments could come? Because international trade is permitting all those foreign direct investments. So because of this foreign direct investment, foreign institutional investment, lots of foreign money is being pumped into India, and because of that the supply of money increases. If supply of money increases, the cost of capital, the cost of borrowings, they definitely would fall down, and therefore interest rates in India gradually has started declining. Now low interest rate is a sign of a developed nation. So gradually if we observe the track of interest rate in India, why we have been telling since years and years that India is a developing nation. It has not yet become developed. We have yet to achieve lots of levels of development, but yes, when you talk about the world economy today, India is a nation that holds a standing. And why is this happening? If you look back to the history, if you look back to the past, the big reason why this has happened was openness in international trade. So now your competition is with the world. So therefore you would want to do best. Doing best in the market means doing best in the world today. So if you want your product to be best, it has to be at the top of the world today. Then we can call it as a best product. So international trade gives you all these advantages. So the next point over here, the sixth point says opening up of new markets results in broadening of productive base and facilitates export diversification so that new production possibilities are opened up. countries can gainfully dispose of their surplus output and thus prevent undue fall in domestic prices caused by overproduction. Now again I will be giving example of China over here. So you know, China is known to have overproduction of various goods, and therefore it is dumping literally all of its surplus output to other countries, and this kind of dumping their output at a very low price is not just giving them the opportunity of utilizing their surplus output, overproduction, it is also cutting down the competition in other nations. Rather, I would say it is troubling the traders of the other nation. So you look from Indian manufacturer viewpoint, you would not like that Chinese goods are coming to India. You would not want so much of competition to be faced. But if you look from the angle of Indian customers, we as Indians, we don't want to buy Chinese product, fact. But what to do? Certain things are not made in India, and therefore we are forced to buy Chinese product. But if there is an open opportunity, let Indian manufacturers, they should also participate. Let them also come up with this production plan. Let them produce goods which are made in India, and then Indian customers will be definitely picking the products of our own nation. That means it has benefit to one segment of economy and definitely no benefit to other segment of economy. If you want to really have complete benefit of international trade, you need to take this competition as a healthy spirit in a positive way. You have to take it as an inspiration and get started. I would say, if there is someone who is my competitor, if my competitor is doing better than me, I will be very happy, because that gives me opportunity to do better. Some person may have a different mindset. If the competitor is doing great, someone may not like it. Oh, why my competitor is doing great? That person should not do that. I am telling you, if you have that positive mindset, if your competitor is doing X, you have an opportunity to do 1.2x. When your competitor is doing 1.2x, you have an opportunity of doing 1.5x. So that should be the spirit of manufacturers in India to deal with this whole international trade issue. Now let me quickly take you through the other 2 points, which are again more of self-explanatory points. Trade can also contribute to human resource development. That is one. And of course, when we are reading the points, this trade word over here, it necessarily means international trade, because we are talking about arguments in favor of international trade. So it is implied that the word trade used in each points is basically the international trade. And last point says trade, that is international trade, strengthen bonds between nations by bringing citizens of different countries together in mutually beneficial exchanges, and thus promotes harmony and cooperation among nations. So we have seen India is having now very good relationships with lots of other countries. If you could see, our Prime Minister Shri Narendra Modi ji, he has been known to have lots and lots of meetings with all the international ambassadors and presidents and prime ministers. Why? Because he is completely in support of making India a developed nation and making India economically highly independent. And definitely we don't want to be independent of that sort, that we should not have cooperative approach with other nations. To build that better relationship economically, financially, politically, all these efforts have been made just for one major objective, that is economic growth. So it's simply from a human being's perspective. If you think, you as an individual, if you are helpful to people around you, when you are in need, these people will also help you. When you have a wrong attitude with people around you, they will also not be supportive when you are in need. So that idea you need to understand, that if that can work for an individual, why cannot it work for the nation as a whole? Now friends, time for us to put focus on the arguments against international trade. So against trade openness, what are the argument against? Possible negative labor market outcomes in terms of labor saving technological changes that depress demand for unskilled workers, loss of laborers' bargaining power, downward pressure on wages of semi-skilled and unskilled workers, and forced work under unfair circumstances and unhealthy occupational environments. Now, what exactly is the point conveyed to you? One good side of openness in international trade is what? It is enhancing technological advancement. Now, today is the world of AI all around you, artificial intelligence. What is happening? Do you know? If now the sensors used in the air conditioner in my studio, if I am getting up from my chair, the blow of wind coming from this air conditioner, it will change the direction depending upon my movement within the room. Now this is a brilliant example of AI. In my studio, the lightnings that are attached, the moment I am stepping out of the room, automatically all the lights will be shut. However, if I don't want my computer system to shut down, I have to just give the system that kind of computerized instruction, that what all gadgets they should keep operating and what all gadgets they should shut down. So if my camera is idle for longer time, the moment it is idle for more than 7 minutes, it automatically shuts down. And the moment I am keeping my mic plugged in and I start speaking, it will start working. Now just imagine, when I have to record these classes in my studio, practically I do not need any supportive system. All these equipments are well designed that right now, sitting over here, everything remote operated. I literally don't have to even move from my place to make any adjustment. Point is what? If this was not there, I remember few years back when this kind of technology wasn't there, I continuously needed one skilled person to hold camera. One cameraman was continuously needed. Now I don't need that. All lecture recording happening automatically. One good advantage is we are technologically moving ahead. But if you see the worst part of this, the bad part of this, one person whose employment was there for this kind of work, that position of that job that was offered to one person, that no longer exists. So what has happened in today's competitive world? If the labor is highly skilled labor, that labor will create its importance definitely. But unskilled and semi-skilled laborers may face challenges because AI cannot replace entire labor force, but unskilled labor force definitely it can replace. So whatever is mechanical kind of work, so I have been telling you, don't be clerks, be accountants, because clerks can be replaced. The real accountants who have brains cannot be replaced. So if you want to survive today, I am telling you this could be taken as a challenge, because one side, everything will have a positive side and a negative side. So the positive side is technological advancement, the negative side is low employment for labor. So the next point in the sequence of arguments against the international trade, it says that international trade is often not equally beneficial to all nations. Potential unequal market access and disregard for the principles of fair trading system may even amplify the differences between trading countries, especially if they differ in their wealth. Here I will not give you example of China. but US as a country can be taken as an example. Do you know, when it comes to petroleum store, US is the biggest store of petroleum in the world today. If there is no petroleum output that is generated, US will still have enough fuel for good number of years, but other nations will suffer badly. So today, if you look into Indian status, in India we have too much of imports of petroleum products. And now what has happened? If there is shortage of fuel, country that could be most affected will be a nation like India, because we have now too much of dependency on fuel and there is very limited supply of petroleum production within the nation. We are dependent on international trade for this purpose. Now see what happens. US as a nation, if you see, they did not have, so many oil mines through which petroleum products could be extracted, but their control over lots of Gulf nations has created a big huge storage in the past, and US is reaping the benefits of that fuel storage. As a result, it has a dominance across the world with respect to that. So when US is dealing with any nation, it will have a little bit of dominance. It is known that it will have that dominance. You cannot question the United States, but United States can question you. Do you understand what is happening? There is one country in dominance of another in a relationship. That could be one-sided kind of trade. So there could be nations which can take advantage. I am not saying that US is a bad nation which will take advantage. I am telling you it has a potential of taking advantage, and therefore international trade can have this kind of an argument against it. So if there is no international trade, these problems won't arise. But always when it is looked from the overall angle, you will find that arguments in favor are much powerful, much impactful as compared to arguments against it, and that is why international trade is something that is happening. So let us just move forward and deal with more points of arguments against international trade. So the next point over here is, international trade is often criticized for its excessive stress on exports and profit driven exhaustion of natural resources due to unsustainable production and consumption. Now guys, you must know that India had been one of the largest producers of coal. But do you know, in the recent time, lots of cities in our country are facing problems of power cut because of severe shortage of coal. And why is this severe shortage of coal has arisen? Because a big huge quantity of coal had been exported in the past years. Because of such heavy degree of exports, the need to our own nation today is getting unfulfilled. That means now today the demand for coal within the nation, it is huge as compared to the available supply. And mind it, coal is not a regenerative resource. It's a natural non-regenerative resource. Once its supply is exhausted, there is no more availability. So already we have shortage. If you keep exporting, what will happen? The shortage will just enhance. This is the time that our country needs to take action on stopping exports of coal. But if you do that, what will happen? Your other relationship with other nations to whom you were supplying coal will get affected, and things which were moving smooth will have little bit of friction. So I told you some points where there are benefits, there are disadvantages as well. So let us look into the next point over here. Next point says, probable shift towards a consumer culture and change in patterns of demand in favor of foreign goods, which are likely to occur in less developed countries, may have an adverse effect on the development of domestic industries and may even threaten the survival of infant industries. This point I have already explained you when I was talking about the too much of electronic imports made from China. So we have already talked about that. Next point says risky dependence of underdeveloped countries on foreign nation impairs economic autonomy and endangers their political sovereignty. Next point says welfare of people may often be ignored or jeopardized for the sake of profit. Next point says too much of export orientation may distort actual investments away from the genuine investment needs of the country. Instead of cooperation among nations, trade may breed rivalry on account of severe competition. So someday when the competition goes on severe and severe, you can just look back at history. If you can see why and what were the causes of the Second World War. The Second World War, the biggest cause of the Second World War was economy. That certain nations started having economic challenges and supply and demand of goods and services which were completely distorted, and certain nations were taking undue advantage of their economic positions, and this has led to the beginning of such a big war. Now few years countries have been just fighting, and then they realize that they have literally exhausted all the resources. Now everything is exhausted. One big reason why the world war came to an end, it was number one, the fall of German nation, and the second reason was each and every nation, most powerful nations, were completely exhausted with their resources. And then there was a need for people in nations or nations themselves to realize that this is the time to stop fighting and go ahead with our economic development. But why there was so much of fighting? It was all because of one major reason: exploitation, competition, international trade, rivalry. So let us look into the points ahead. The last point over here, finally, there is often lack of transparency and predictability in respect of many aspects related to trade policies of trading partners. So I'm sure you understand this. Now we begin with the next segment, that is important theories of international trade. Now in the sequence of these theories, we will first pick up the first theory, that is the mercantilist's view of international trade. Now what is exactly the summary of this theory? Let me explain this to you. Now this theory believes that a country can prosper when it is having more and more of exports, and in exchange if it is gathering precious metals like gold and silver. So more of such precious metals you gather within your country by making exports, what will happen? The richer and wealthier you become. That is the whole idea. So it's basically one thing. Just imagine yourself as a farmer. How will you earn income? When you grow crops, you sell crops, and you earn money. So this theory believes that precious metal is the real money. Precious metal is the real money. So gold and silver that you can collect, that will be the best way of accumulating wealth. And now what you have to provide as exports, all regenerative resources like agricultural produce. If there are regenerative resources, you keep producing these goods and keep exporting and keep gathering. Mind it, the overall supply of gold and silver across the world, rather I would say across the universe, would be very limited, correct? You cannot have unlimited supply of gold and silver. But if I tell you that my country is producing crops and all different types of food grains, oil seeds, coffee beans, etc., which can have good long life, and it is exported in a bulk, and my country is getting the exchange in return, that means the consideration for that sale or for that export is in the form of precious metal. And if this phenomena happens at a stage, my country will be gathering huge resource of gold and silver deposits at one stage, and that is the point where I attain wealth. My nation attains wealth. That is the crux of this theory. So this theory believes that if you are at an advantage, somebody must be at a disadvantage. Now this theory has lots of shortcomings. Many a times when two parties deal with each other, it's a win-win situation for both. For example, if you have paid fees to me and I am taking your class, for me it's a beneficiary situation that I am earning some income. You are getting some knowledge and tactics to face your exams, so you are also at an advantage. So it is not necessary in a transaction that if I am at an advantage, you are at disadvantage or vice versa. But this theory believes that if one nation is at an advantage, other nation must be suffering, other nation must have faced that loss or that disadvantage. And this theory believes that overall, if you see the world as a whole, then it is a zero-sum game. Zero-sum game means one's gain, another's loss, it will get offset. That means overall there was no value addition. But that is one of the typical shortcomings of this theory. In spite of these shortcomings, this theory carries good weightage, good importance, especially in Asian countries. And that is what given in this entire paragraph about the mercantilist's view of international trade. So let me take you ahead with the next theory, that is the second one, the theory of absolute advantage. Let me just elaborate this over here. Now this next theory is the theory of absolute advantage. So Adam Smith was the first to put across the possibility that international trade is not a zero-sum game. Mind it, the previous theory, that is mercantilist view, we have seen that they believe that it is a zero-sum game. Adam Smith was the first to believe that it is not a zero-sum game. According to Adam Smith, who supported unrestricted trade and free international competition, absolute cost advantage is the determinant of mutually beneficial international trade. The absolute cost advantage theory points out that a country will specialize in the production and export of a commodity in which it has absolute cost advantage. So let me tell you one thing. If you can look into strength of our country, what is the strength of our country? Today we are able to have good quantity of agricultural produce. In northern and southern part of India, we have good varieties of spices which are being produced and which are exported in heavy quantity. India is a great exporter of mangoes. India is nowadays great exporter of pharmaceutical products. Just use your common sense and tell me why someone will import pharmaceutical products from India. Why other nations will be procuring that thing from India? One big reason could be non-availability of technology with them, non-availability of research and development with them, or another reason could be the cost of manufacturing the medicine over there could be very high. See, simple thing, population in India has always been taken as a problem, but have you looked into the other side of this? Population, the bigger population can carry a big advantage also. So in India, when pharmaceutical companies are producing medicines, they are capable of producing medicines in bulk quantity, and the moment you go for a bulk production, the cost per unit falls drastically. You have learned this in your costing subject that the larger the quantity of production, the variable cost per unit remains same, but the fixed cost per unit declines because that much burden of fixed cost will be now borne by a bigger quantity. So the burden of fixed cost per unit is very low. On the other side, just imagine what would happen with a small nation which is capable of producing very small quantity of this pharmaceutical products. They will find that the cost of production for them is very high. So those nations are facing huge problem of absolute cost disadvantage, and India on the other side is facing that benefit of absolute cost advantage. Similarly, for us in India to produce petroleum products, it is very expensive matter. That is why our own production, we have scarcity of that product, right? We have scarcity of petroleum products, and therefore we are importing crude oil, we are importing petroleum products. Why? Because we have lesser availability and the import is getting more easily accommodated in this system. So the whole idea is, one country is having an absolute cost advantage, another country is having a disadvantage. If one country has an absolute cost advantage, another has a cost disadvantage, the one having cost disadvantage will be purchasing goods from the country in which there is absolute cost advantage. And as a result, you will find that India is making exports of those goods only in which India has been capable of producing those goods at a very low cost per unit. And who is importing? The counterparty either does not have facility of that production or the cost of production would be very high. So what happens if India is making that particular export? On the other side, India is also importing a lot of products. I gave you example of this writing tab and this kind of electronic pen some time back. What is the point? In India, we don't have that technology, so we are dependent on other nations. So in Indian situation, that kind of technology will have to be procured. So if a country has taken up some R&D project and they have built that technology, we don't have that technology, so we have to pay a heavy sum to purchase that technology, then we can produce such products in India. It is not necessary that the technology provider may give you the technology even for some value. They may restrict that monopoly with them, and therefore we don't have a choice but to simply make imports. That means for products like this, Indian situation provides absolute cost disadvantage, but countries like United States, they have absolute cost advantage. This product what I am using is a product of Microsoft. Now I am not a brand ambassador of Microsoft, so please don't take me wrongly, but this is such a finest product. I just love using this product. So in India, we are now in the verge of pulling such Microsoft products production, and that is the plan ahead, what we call as our strategy of Make in India. We are inviting these international entities that you please come. We will provide you land, we will provide you all other resources. You have good solid production. We will provide you labor at a lower cost. We will provide you land at a lower cost. We will provide you infrastructure at much reasonable prices. You just allow us to produce. You share your technology. We will share our resources. Let us make the product at a low cost. When this happens, then India will have no need to import this Microsoft product, because that will be then manufactured within India, of course under the license of Microsoft. So if this thing happens, that is why our Prime Minister Shri Narendra Modi ji, he is behind one thing. He is visiting each and every country with one motto. He is inviting people to come to India, make products in India. Just for one reason, so that what we are today finding as absolute cost disadvantage, we can convert that into an absolute cost advantage. What will happen when India starts exporting Microsoft products? Just think. What will happen one day when Microsoft company in the United States, it finds that their cost of production of making this kind of pen is higher than what is produced by the Indian franchisee. If the Indian licensee or franchisee is capable of producing this at a low cost, what they will do, you know, they will shut down their production operations over there. They will ask the Indian franchisee that, okay, fine, you produce 1 lakh units of pen for yourself, fine, you sell it on your own, produce another 1 lakh pieces for us and send it. So for them, that day, this product will become absolute cost disadvantage, and for India it will become absolute cost advantage. I have just a desire that one day our country should reach that dimension, and that is the onus on all of us, right? When you people become chartered accountants, when you people understand the macroeconomics and you start implementing, you start suggesting your companies in which you will be working as you know, qualified good professionals, you will take the country ahead. And I will keep praying to God that our country should be led by such great ministers who really have wisdom, okay? And if that thing continues for a good number of years, we will be having a way ahead compared to what we are now. So anyway, that was all about the theory of absolute advantage. So it is all about absolute cost advantage and having absolute cost disadvantage. Summary of this theory would be, when you have absolute cost advantage, you will export that commodity, and commodities where you have absolute cost disadvantage, you import that commodity. So you have to make pairing. So if you are good at agricultural produce, you are not good at electronic products, you make import of electronic products, make exports of agricultural produce. You know what will happen? Both buyer and seller will be exchanging their respective goods at which they have respective cost advantages, and both will be mutually benefited. So Adam Smith therefore pinpointed that you cannot say that international trade is a zero-sum game. It cannot be called zero-sum game. It could be a win-win situation for both the countries. That has been explained in this theory. So let me take you ahead with the next theory. So the next theory in this sequence is the theory of comparative advantage. Now, actually speaking, the previous theory and this theory, these have hardly some difference. Do you recall what I have just explained you in the previous theory? One nation is having absolute cost advantage for one commodity, and the other one will have absolute cost disadvantage. So the one that has absolute cost advantage should be exporting the product to the other nation which has absolute cost disadvantage, and if you have absolute cost disadvantage, you should make an import. So over there it was about advantage and disadvantage. Here, this theory developed by Ricardo, this theory believes that okay, even if all nations have disadvantage, then you can compare your disadvantages, or rather if you all have advantages, you can compare your advantages. So if you talk about disadvantage, suppose there are two products. In one you have lesser disadvantage and in another you have bigger disadvantage. One in which you have lesser disadvantage that you should export, the one in which you have greater disadvantage of manufacturing yourself that you import. So basically you are not comparing advantage versus disadvantage, but rather lesser disadvantage with bigger disadvantage. So smaller disadvantage products you should export, bigger disadvantage product you should import. So people may get confused over here that why it's like this. Let me give you the example of the food grain in India and this kind of electronic product in the US. What did I say? That India has an advantage of growing crops within the country. Agricultural produce is good in India. The cost of agricultural produce is low in India. So we have cost advantage. Fine. Leave that agricultural produce aside. Let us bring some industrial production. So industrial production, if you see, production of steel in India is not that advantageous that India can export too much of steel, okay? Because in India also we have good requirement of steel, and steel again is made out of iron and other minerals, and these minerals are not having unlimited supply. But we have a little bit of disadvantage, but other nations who don't have iron ore deposits, they have bigger cost disadvantage as compared to India, and therefore India, even though not having absolute cost advantage, it is still making exports of steel. Why? Because it is having smaller cost disadvantage compared to nations who have bigger cost disadvantage. So even if it is disadvantageous, not advantageous, you just see the products having lesser cost disadvantage are worth exporting, and products having higher cost disadvantage are worth importing. That is the crux of this theory. So let me take you ahead, and the next one in the sequence is this theory. Now, the Heckscher-Ohlin Theory of Trade. Now guys, this particular theory, if I start discussing from what is given in your ICAI study material, you will be going crazy because it is too big and too much of content is given. If I just scroll the pages, it is something like it's never ending, and then they are giving some comparisons, and then there is a new trade theory, a small aspect given, that's all, the end of the chapter. So what I would suggest you is, instead of going through this theory in so much detail where too much of content is given, other theories they were restricted to one or 2-3 paragraphs. This theory is quite big, covering some 3-4 pages of your ICAI study material. I would summarize that whole thing at the last stage of my notes. So when I'm discussing that part, I'll give you notes along with that. So we have almost completed the chapter. Now what is left over? What all we have covered in the early part. I repeat, what all we have covered in early part. I'll give you summarized notes of that first thing. Then I will give you summarized notes and explanation of this Heckscher-Ohlin theory. And once we are done with this, we are done with the chapter. So guys, you would just be now required to write up some important notes, which we always do in all other chapters. So notes writing, and when we come to this particular theory, notes writing and explanation both will be done. So let us begin writing these notes. First thing, what is asked over here, define international trade and describe how it differs from internal trade. So you may start writing, international trade is the exchange of goods and services as well as resources between countries. It involves transactions between residents of different countries, whereas domestic trade or internal trade involves exchange of goods and services within the domestic territory of a country. International trade involves transactions in multiple currencies, whereas domestic trade only uses domestic currency. So please write up this much, and then I take you ahead. Alright friends, once you have finished writing this much, let us move ahead and write further. Compared to internal trade, international trade has greater complexity as it involves heterogeneity of customers and currencies, differences in legal systems, more elaborate documentation, diverse restrictions in the form of taxes, regulations, duties, tariffs, quotas, trade barriers, standards and restraints to movement of specified goods and services, issues related to shipping and transportation. So please write up this as well, and then I take you ahead. Alright friends, once you have finished writing this much, let us move ahead and continue writing further. Arguments in favor of international trade. It is a powerful stimulus to economic efficiency and contributes to economic growth and rising incomes. It induces companies to reap the quantitative and qualitative benefits of extended division of labor, enlarges manufacturing capabilities and benefits from economies of large scale production, reduction in domestic price due to increased competition, thereby increasing the living standard of citizens. Exports stimulate economic growth by creating jobs which could potentially reduce poverty, and international trade provides access to new market and new material and enables sourcing of inputs and components internationally at competitive prices. So please write up this whole thing, and then I take you ahead. Alright friends, after writing this whole thing, that is all about arguments in favor of international trade, let us move ahead and write about arguments against international trade. And here you write possible negative labor market outcomes in terms of labor saving technological change that depress demand for unskilled workers, loss of laborers' bargaining power. Economic exploitation is a likely outcome when unprivileged countries become vulnerable to growing political power of corporations operating globally. Excessive stress on exports and profit-driven exhaustion of natural resources due to unsustainable production and consumption. It may have adverse effect on the development of domestic industries and may even threaten the survival of infant industries. So please write up this whole thing and then I take you ahead. Alright friends, I am sure you have finished writing this whole thing. Let us move ahead and continue writing further. That is the arguments against international trade, the demerits of international trade basically. Risky dependence of underdeveloped countries on foreign nation impairs economic autonomy and endangers their political sovereignty. Instead of cooperation among nations, trade may breed rivalry on account of severe competition. Liberal global trade and investments are often criticized as detrimental to national interest. The domestic entities can be easily outperformed by financially stronger transactional companies. So please write up this whole thing and then I take you ahead. Alright friends, once you have finished writing the arguments against international trade, let us move ahead and write notes on a very important theory, that is Heckscher-Ohlin Theory of International Trade. The Heckscher-Ohlin model is a theory in economics explaining that countries export what can be most efficiently and plentifully produced. This model is to evaluate trade, and more specifically the equilibrium of trade between two countries that have varying specialities and natural resources. Emphasis is placed on export of goods requiring factors of production that a country has in abundance, and the import of goods that a nation cannot produce as effectively. According to this theory, international trade is but a special case of inter-regional trade. So please write up this much and then we shall move ahead. Alright friends, let us continue writing about this theory ahead. So in the next point you can write different regions have different factor endowments, that is some regions have abundance of labor but scarcity of capital, whereas other regions have abundance of capital but scarcity of labor. Different goods have different production functions, that is factors of production are combined in different proportions to produce different commodities. While some goods are produced by employing a relatively larger proportion of labor and relatively smaller proportion of capital, other goods are produced by employing a relatively smaller proportion of labor and relatively a larger proportion of capital. Therefore, difference in factor endowment is the main cause of international trade as well as inter-regional trade. So please write up this as well, and then we shall move ahead. Alright friends, once you have finished writing this much, let us move ahead and continue writing further in this theory. The immediate cause of inter-regional trade is that goods can be bought cheaper in terms of money than they can be produced at home, and this is the case of international trade as well. The cause of difference in relative prices of goods is the difference in the amount of factor endowments like capital and labor between two countries. Thus, it can be concluded that this theory states that labor abundant countries have comparative cost advantage in the production of goods which require labor intensive technology, and by the same reasoning, capital abundant countries have comparative cost advantage in the production of goods that needs capital intensive technology. So please write up this whole thing, and that will be end of this theory as well as end of the session.